Hello everyone, Mark Anderson here, Home Loan Officer at Carrollton Bank in St. Louis, Missouri, presenting episode 7 of my series, The 5-Minute Mortgage Class. Today's subject, strategies you can use to boost your credit score. So the credit score is calculated with these 5 categories in mind, and the credit agencies apply a different weighting to each of the categories based on how important it is to determine your overall credit performance. You'll notice that payment history is weighted the highest at 35% of the score, followed by balances owed and on down the line. What we're going to be doing in this video is breaking down each category and teaching you how to optimize each one to ensure you have the highest credit score possible. Now, I shot a previous video on the credit score's impact on your mortgage options. Suffice to say, the higher credit score that you have, the cheaper your mortgage is going to be across a wide variety of categories, including the interest rates you're eligible for, the private mortgage insurance rates that you'll pay if you have to pay it at all. So let's get right into it. Payment history is the single most important aspect of the credit score evaluation. What you're doing is every on-time payment that you make to a credit card, installment loan, student loan, etc., is going to be contributing positively to you in this category. So it's important that you make your payments on time. If you are late, it is useful to know that you're only reported late to the credit agencies after 30 days late. That becomes a mark against your credit rating. That mark gets worse as you hit 60 days and 90 days. A single 90-day late payment can impact your score as much as a bankruptcy. Now, there are some other things that can negatively impact you in this section that are particularly calamitous. These would include collections, charge-offs, and judgments. So my advice for this section, you could really make it very simple and just say, hey, make your payments on time. But I know that it's not that simple, especially if you're in a situation where you're facing a lot of debt that you're managing. The key here is communication. And what I'm going to recommend that you do is take communication with your creditors very seriously, especially if you're in a situation where you're unsure if you're going to be able to make a payment on time within that 30-day window. You will truly be a 1 out of 1,000 person that actually communicates with a credit card company that says, hey, I'm facing a problem, maybe it's a temporary problem. Can we work out some type of arrangement to allow us to avoid a 30-day late payment on credit? Or maybe you are facing a potential collection. Talk to them, figure out what you can do to avoid that. Things like collections, charge-offs, and judgments, the problem with them is they hit your credit score really hard, and there's not much you can do about it once they're already there. For instance, a collection account, if you pay the whole thing off after it's already gone to collections, believe it or not, the credit agency will not increase your score for a paid collection. So it's important to focus on communication with your creditors if you're in a troubled situation to avoid any of these reports going on your credit rating. The next thing that's important are your balances owed. In general, the more you owe on credit versus the overall limit on those cards, that is going to more negatively impact your score. Now, the credit agencies say an ideal credit scenario involves a situation where your overall balance is less than 6% of the limit. Now, I think that most people are going to find that difficult to pull off, particularly if you're in a situation where you're managing quite a bit of debt. In general, if you can target 30%, if you can keep your balances less than 30% of the limit, I find that most people are going to put themselves into a favorable category in this place. Now, let's say you owe a lot of balances on a lot of different accounts. The credit agencies say that if you owe over $3,000 total on revolving accounts like credit cards, so not including things like student loans, car loans, etc., if you owe over $3,000, you're also going to be losing points in this area. So you may be in a situation where a solid debt repayment strategy is what you need to put into place to optimize this section. There are a lot of resources out there. I'm probably going to shoot a video here soon on some debt management strategies. But again, it's the balance that you owe versus the limit in this category that has the most impact. So one thing you can do is a little bit of a trick. Let's say you're trying to squeeze out maybe just 10, 15 points. One thing that you might be able to do is negotiate with the credit agencies to simply increase your limits on your cards. What that's going to do is, without you reducing the balance at all, that's going to decrease the overall percentage of the balance versus the limit that's owed. All right, next up, length of credit history. The credit agencies like to see a long track record of you managing debt payments over time. Now, I can't tell you to go back in time and open a credit card a long time ago. That would be great if you could, but you can't. So the key thing here to keep in mind is that the credit agencies are primarily looking at your last 7 years. What you want to do is you want to look at the account that maybe you opened the longest time ago. Maybe most of the credit that you have in your name was opened in this window here, 2013 through 2014. But maybe you opened one credit card way back in 2011. What people do that accidentally hurts their scores is they will let that account go. They will stop using the card, it will fall into an inactive status, and when it does, you're no longer receiving the benefit of the on-time payment records associated with that account. So any credit that you have, keep it open, keep it active. Maybe use it once every 3 months, pay it off so you avoid interest payments, but that's what you need to do to optimize this category. All right, next up, credit mix. So what the credit agencies say in general, they want to see 3 overall what we call trade lines. So that is 3 different things that you're making payments on. Now, the mix refers to the mix of installment accounts. That's things like car loans, mortgages, student loans. But they really want to see that mixed with revolving debt, like credit cards. Managing revolving debt arguably shows that you have more control over taking on debt and paying it off responsibly over time. So it's important you have at least 3 trade lines. Make sure at least one of those is an actual credit card. Ideally, you want maybe 2 or 3 credit cards, maybe 2 or 3 installment loans to optimize this category. New credit. This section is primarily set up in such a way that if you are making a run on credit, if you're applying for every credit card under the sun, this section will tend to ding your overall score. That said, the credit agencies say apply for new credit when you need it, but no more than that. All right, where to go for help? Let's say you have a particularly challenging case. You may be tempted to look at credit repair agencies. Now, this may be somewhat controversial, but in my personal experience, I find that these companies tend to make unrealistic claims, and they tend to use strategies that don't actually focus on ensuring that your credit is good on a go-forward basis. What they do is they use a lot of tricks to attempt deletions of late payments and things of that nature on your credit report. Some of those things put you in a position where you're signing an affidavit saying, I never made that payment late. I don't think you want to put yourself in that position. More importantly, I find that a lot of times those strategies anymore don't work. There are various loopholes over the years that creditors have gotten wise to as far as challenges to late payments and things of that nature. And what they're going to turn around and do is, after you spend a lot of money with a credit repair agency, they're going to come through and a lot of times confirm exactly what was there before. The important thing to do is today going forward, make sure to manage the different categories that we talked about, manage them aggressively, stay in communication with your creditors, and do everything you can to optimize each of these categories. Now, if you are in a situation where you're dealing with a creditor that's not playing nice, maybe there is some information out there that's not accurate, you do have help through a government agency called the Consumer Financial Protection Bureau. I actually have personal experience using them on a complaint that I had about a creditor. Once I made the complaint on their website, which is consumerfinance.gov, my issue was resolved within 48 hours. If you have any questions about your credit circumstances, maybe some debt repayment strategies, ways of dealing with bad credit in the past, and how to optimize things going forward, give me a call or shoot me a text to this number. Thank you so much for watching.